Hi, you're watching Capital A's IRTV with me, Haida Daud. 2023 was a continuation of recovery for Capital A, getting 189 from 212 planes up and running, rehiring retrenched and furlough staffs, rethinking, refining our overall business strategy, and reorganizing ourselves into 5 clear business verticals. To talk more about this, we have Capital A's CEO, Tony Fernandes. Welcome. Thank you for joining us here today. Happy New Year.
Happy New Year to everybody and yourself.
Thank you. Congratulations on steering the company back on course and navigating through the pandemic. So now that we are into 2024, what would you want to achieve and what do you hope to see for Capital A as well as yourself?
Yeah, I think the key now, following our announcement yesterday, is to drive home the acquisition of AirAsia X of our airlines. That's the number one focus for myself, and at the same time, ensuring a strong future for the other 4 companies. I think the next step is now to announce the full sale and purchase and the full terms of the deal, which I hope we can do in the next 2 weeks. And then the process after that is to get the shareholders' approval, and then we need court approval, and then we'll be listed as a separate company. This may go on till about May of next year, hopefully a bit sooner, but that's our target right now. Parallel to that, we now have these 4 companies, Teleport, AirAsia Move, Capital A Aviation Services, and Capital A International, 4 more companies, which we can now focus on really telling investors and the like what the future is for these 4 companies, that you have an airline and then 4 strong other verticals that I'm sure we'll talk about during this interview. So for me, priority also is to create the beginning of the succession plan. We have a really good second line of leaders, starting with Bo, Nadia at Move, Zubin at Big Pay, Pete at Teleport, and Mahesh at our engineering company, ADE, Catherine at Santan. And so that's my journey over the next 5 years to get all that second liners ready. My role will be Capital A CEO, and I think I'll be appointed as the advisor to Bo on the aviation side. So very much still the same as what I've been doing for the last 23 years, but obviously trying to hand over and be more on the strategic value to the airline, and then developing the other 4 businesses.
So yes, you already have actually answered most of my questions, but we would like still to know in depth as we go along. So Capital A has been busy evolving from an airline into a multi-business group of companies. Given the diverse portfolio, how do you envision in achieving the synergy and creating value across all 5 core verticals?
Yeah, well, the synergy, let's do with that first, has been tough, to be honest, because you've got 5 new CEOs all looking at their own P&Ls, in some ways all trying to beat Tony Fernandes and Cameron Maranon. So this last 3 years has been making sure we get the synergy. So we have it in contractual form. We also have it in the more soft side, that people begin to see that for each of these verticals to succeed, they need the ecosystem to work. I want to talk about that and what it is. So the airline is the big mummy that has created these 4 verticals. So let's talk about each of these verticals and how they interact. Firstly, Teleport. No airline, no real Teleport to kick off, though their business is going to not be solely based on AirAsia. But obviously the majority of their business at the moment is through AirAsia's belly space, and now AirAsia has bought them freighters. So they're an asset-light logistics provider with 3 main businesses: air cargo, e-commerce cargo, which is last mile and first mile, and then a new business, which is a courier business. So 3 businesses. The assets are coming from AirAsia and other airlines to create the air side, and then the last mile is also created by third parties. So it's the first kind of, I'm sure there are others, but the first I'm aware of in Asia, of an asset-light logistics provider. Rather than they owning hundreds of planes and hundreds of cars and trucks and motorbike guys, I think we've taken the approach of trying to almost be a cloud logistics provider. By forming a separate company in Teleport, we've been able to work with other airlines as well and other third-party providers. So, the exciting thing about Teleport is ASEAN Cargo is just happening. It reminds me, I posted on Instagram the other day of when we started with 2 planes. I think Teleport will end up with, just short of 100 cargo planes over a period of time and become one of the largest logistics providers in Asia. We're already in air cargo #1 in the space of 2 years. So that's the first vertical where the ecosystem is so tight that all the planes are contracted exclusively to Teleport, all the cargo, which is a revenue share. And now there's a contract between Teleport and all of the providers. But things that investors should know that was difficult for me was that, the airline has been a passenger airline. So they never looked at doing cargo routes or flights, which are predominantly cargo with some passengers. That's taken a while. And, Teleport wanted certain routes on a wide body. The airline was like, does that make sense? But now we've got to a position where the network guy, Paul, was working very closely with Teleport. It's a win-win, because some routes we wouldn't have done because the passengers weren't strong enough. But with the cargo, 1 + 1 = 3. So that's the first synergy that we have got contractually, but also philosophically, that both parties, AirAsia and Teleport, realize that there's a symbiotic relationship and they both can win from that. So that's been sorted. The second one is Move, a more emotional one. We have 2 companies under Move, BigPay and AirAsia Move. So AirAsia Move is very much the airline's asset, right? It was the website. And the airline's kind of given that up and seen competitors on that website. But what is the reason for this? One is, as we evolve and we disrupt, and now many airlines are looking at what we're doing, Move can create more synergistic relationships for AirAsia, Garuda being the first, in that we're tying up with CityLink, and there are going to be more announced. So Move has the relationship, brings that relationship to the airline. And where, for instance, we're not strong in domestic in Indonesia, but we're very strong in international. So 1 + 1 = 3 there. The second thing about having Move is that it has the ability to dedicate in selling ancillary income. And the next one is, we'll be the first OTA to pay the airline for hotel bookings, right? That's the first. Airlines are generally giving OTAs all their information and get nothing for selling the hotels. So we're going to be the first pro-airline OTA. You see a lot of conflict in Europe between Ryanair and other airlines. And we can help other airlines sell ancillary. So the relationship for AirAsia is that they're going to earn income from Move. They're going to have their rewards program now is much more valuable. And they'll have a dedicated team for ancillary as well. And that relationship is also now tied up in a long-term contract. But that was a hard one for both management teams to see. Airlines are, why should I give up my website? And Move is like, airlines being difficult. But now they really see the win-win of that. BigPay also, I've had frustrating CEOs, 2 CEOs before, who almost wanted to be independent but didn't see the value of the ecosystem. I've got a 3rd CEO now in Zubin who really sees the value. And we want to do what Grab has done. If BigPay can do the bulk of payments for AirAsia, the airline saves about 1%, and 1% margin when you're doing 21 billion revenue is a lot. Stops fraud and has a very rich treasure trove of data as well. And so Airline and Move now see the benefits of having BigPay in their ecosystem. There are no hard contracts in that, and maybe that's something we need to do, but at the moment we don't. And my goal in the first instance is that 30% of our payments from AirAsia Move will go through BigPay. And that's a very synergistic. So Airline benefits from Move's relationship with other airlines. Airline benefits from a dedicated ancillary. And now Airline, which never was good at selling hotels and other products, can earn some income from Move. And the Airline benefits from, as I said, strategic relationships with other airlines and hotel groups, et cetera, et cetera. So that is radical, that's disruptive. No airline has ever done this, to create a separate company, but I think we're building a very valuable asset in AirAsia Move and a 21st century, a real 21st century OTA, which is not just selling airline tickets and hotels, but rides, and has a very strong community, giving back to the community, soon NFTs, a very strong rewards program, a very strong messenger program. So we're much more than the average OTA. So I always say we're Expedia and Traveloka plus. BigPay, obviously the synergy I've talked about, and they will be closer and closer with a rewards program. Also, there's a lot of synergy between storing your rewards on a wallet, using your reward points to pay as cash, to treat rewards as cash. And so now people are beginning to see that synergy there. Capital Aviation Services is obviously very, very tight with the airline. At the moment, 95% of ADE's business goes through AirAsia. Now that's going to change, but AirAsia gives the volume to ADE to be able to soak up a lot of overheads and then give a really value product to other airlines. So that business is going to grow from strength to strength and be very, very strong in the future. Airline benefits from the fact that we never had our own MRO to do C checks. So we now see how much others were making on MROs. And so AirAsia benefits from a much cheaper MRO and faster. Obviously, if you have a plane for 365 days, but it's in the hangar for 40 days, you lose 40 days of income. So the less it's in the hangar, the better. So ADE gives a faster turnaround on maintenance and a cheaper product. Win-win for the airline, win-win for ADE. Santan obviously benefits from taking 22 million meals from AirAsia. And again, that is giving Santan the ability to go and build other businesses. We're looking at supplying food to coffee houses. So we've gone away from the restaurant business to be more B2B. So the upside for Santan is massive based on the volume that AirAsia gives. So our nasi lemak is now sold in mini markets, in coffee outlets. And we're working on a product that can be long-lasting and taste as good as what you have on the plane. And that would open us up to selling nasi lemak around the world or chicken rice around the world. Have a 7-month shelf life. So Santan is an exciting product that's not fully understood. And so that synergy is obviously there. There's no issues there in that synergy. And there's a long-term contract there as well for Santan and AirAsia. The other two companies, which we'll talk about, but it's not really, it has, of course, some synergy with AirAsia, is AirAsia Consulting, that all the expertise we've learned over 23 years, we can give to other airlines that we don't necessarily want to have a share in. So our focus now is ASEAN. We would like to have an airline in every corner of ASEAN. We have 5. We have 5 more to go. Singapore, Vietnam, Laos, Brunei, and Myanmar. Whether we get all 5, whether all 5 are economically viable, time will tell. But that's the story I'm saying, that we'd like to be the first truly ASEAN airline, of which we probably are the most anyway, with 5 countries already. So, it'd be great to be in Vietnam, great to be in Singapore as well. Time will tell. So why waste the knowledge we have? Why not give other countries the ability to do so? We started AirAsia Consulting, and we will probably use our brand in a different way. Maybe we call it AirAsia Blue, AirAsia Orange, or whatever, but it will be kind of a affiliate airline, but not owned by us. And Bangladesh is the first one, so that's AirAsia Consulting. And that consulting arm will grow into engineering consulting, food consulting, etc. Right? We have a shared service company, which would be a specialist for aviation shared services, and that may be something we can develop in time. we haven't fully finalized what darts is going to look like. And eventually, at the moment, because of PN17, GTR is in the aviation business, but we'd like to bring it into Capital A Aviation Services. Where the synergy is very clear and has been signed is our brand. So we've created a branding company under Capital A International, which will be listed in America. And then we've taken all our developing businesses, we've created an incubator fund, which will house AirAsia Academy, which we think has a fantastic future because that is great LMS. And then hotel companies have approached us to start AirAsia Hotel. Mobile phone companies have approached us to start AirAsia Mobile. Samsonite wants to do AirAsia Luggage. And we have a great brand. We have expertise in providing lifestyle services for Muslims. So we have Ikhlas in that business. So Capital A International will be kind of a branding company, an incubator of not just AirAsia brands, but brands in ASEAN that we have a big expertise in.
Okay. It has been very busy 2023, putting all the
Yeah, it's been a
groundwork for
tough
this.
2023, probably harder than COVID because everyone expected everything to be back to normal.
Yeah.
Very tough year because ASEAN was probably a year behind everyone else. And, everyone expects in Europe and America that everyone should be back. But until today, we still have, 30-odd planes not back in service, apart from the routine maintenance planes. So to be absolutely precise, we have about 13 in C-check from storage, and we have another 11 still to come. So we have 25 planes still to finish the storage C-check. We have 16 planes in normal C-check every year. And then we have about the balance to get to 212 planes are just going through approvals from authorities after the C-check, right? And we brought some planes from my airline and Frontier. So tough year because everyone wants to be paid. We have a mismatch of costs. We have pilots and planes of 212, but we're only flying, as of today, 161. So it's been tough, but, I'm very excited about the merger or acquisition, however you want to call it. I'm sure we'll talk about that. And I now have clear line of sight for completing that, and I can really focus on the other 4 companies. And so now that we've got that, we've also had to manage this all without any funding. No equity funding, limited debt funding. So 2024, I think that will become clearer that we can start to raise capital, which this company badly needs. But what have we achieved in 2023, apart from everything that you know and the things that you don't know? We have sorted out all our creditors. We've got a little bit more to sort out. All the leasing has been restructured. GE has been restructured. Airbus has been restructured. And now maintenance contracts are being done. So you go into 2024 when we raise capital, we won't be using that capital to pay all debts. We'll be using that capital to grow, which is minor. But it's a tough 2023 because, bringing back 212 planes is a massive task by itself. It's harder than starting the airline. On top of everyone wants to be paid, customers expect a Rolls-Royce service, but when you have planes that haven't been flying for 3 years, they're going to be, things that don't work. It's when you don't play football for 3 years and you'll discover new muscles, right? So tough, but we come through it. And 2024 will be an easier year, but still tough for the first 6 months. And then 2025 year is going to be an incredible year.
It's proven that you get company out of crisis. AirAsia X made it out of PN17 when we know not many companies do. Is it possible for you to outline it, your plan for Capital A?
Our plan is very simple. I think it's beginning to come to fruition. Obviously, the disposal of the aviation assets takes a big chunk of the balance sheet out of Capital A and allows the airline also to be independent, strong, and raise capital from airline investors. And that leaves 4 assets. And after we list Capital A International via American listing, then effectively we're out of PN17. So I think we will submit a plan soon. Our focus, and why we asked for an extension, was our focus was getting this airline acquisition done, which I think is critical for the airline in terms of raising capital and growing, and kind of relieving the pressure on capital A from our funding needs, etc. So quite confident of getting out of PN17. We've done it once before. We know what to do. And I think it shouldn't be an issue once all the information comes out. People will know that it's only a matter of time before we get out of PN17.
Okay, and what is the plan for Airline after this?
Airline's very exciting. We have now, with the advent of aircraft that Airbus have given us, the LR long range, 321 long range, and the XLR, extra long range, we can go from 9 hours to 12 hours. From initially the 321 could do about 4 to 5 hours. So that changes the whole perspective. And when we started this airline, AirAsia X and AirAsia, we felt they should be separate because they were two different models. But now 3 new things have come into the play, which means it makes sense to put them together and makes it very exciting putting it together. Firstly, airports are full. Many airports are slot constrained. So it's better to take a wider aircraft because the demand is there, a larger aircraft. So better to take almost 400 passengers than just 186 passengers. If you have one slot and you can fill the plane up twice, why not take a wider body? It also helps on cargo. Second, the 321 XLR and XL means that, before we did 4 hours for AirAsia and above 4 hours for AirAsia X, but not every route can take a wide body. But now with 186 to 223, we can really go everywhere. And that means we can create a network airline as well. That's new. So many, I don't know the exact percentage, and I should find out, the number of people that connect on AirAsia is growing all the time. So we become the first kind of network low-cost carrier, and it hasn't affected our cost structure, which was the myth before. So connecting passengers, airport slots, the 321, means that we can build a network as good as Emirates and Qatar. Not from one city, but from potentially 4 or 5 cities in ASEAN. I'll treat ASEAN as a hub. So we have Manila, they can hit the west coast of America. We have Bangkok, they can hit Eastern Europe and Central Asia. We have Malaysia, they can hit Africa. We have Jakarta, and Bali, they can be the connector between Australia and North Asia. So it's a very exciting period. And I believe, Africa is, the connectivity to ASEAN is poor. This is my next Marco Polo kind of thing to do, is develop Africa. We're on the way to start Central Asia already with Kazakhstan, and Eastern Europe will come next. One of the most popular destinations for Malaysians is Czech Republic. There's no direct flight. We already cover a lot of Asia. And from Manila, we can do the west coast of America and maybe further on if we get another aircraft. But predominantly, we're going to have 2 aircraft, 330, 321. While the Middle East is really geographically beautifully centered around the middle of the world, we're not. But we have 700 million people here. We're not competing with the Middle East. It's a different market. We're trying to get 700 million people to fly around the world, which I never had a chance. We did it in ASEAN. We got 700 million people flying to Bali and Phuket and Malaysia and Thailand, etc. Now we want those 700 to fly to America, to fly to Europe, to fly to Czech Republic, to fly to Kenya, etc. But we also want the rest of the world, 3 billion, to come to ASEAN. And we think we provide the best connectivity. On top of that, with our ecosystem, we'll give you a good hotel, good car ride, we'll give you great information from our community in AirAsia Move. And so it's I said, without sound like Miss World, we're creating a much smaller world through connectivity. So I never thought AirAsia and AirAsia X would be merged. But the world has changed. And that's the beauty of us. We don't stand still. We disrupt, we change, we adapt. And I think we're going to build a first kind of global network carrier like Emirates and Qatar have done in a low-cost fashion. We'll always be value-driven, right? And effectively, the economy sections of Emirates and Qatar are kind of low cost as well. But we're much more heavier in terms of secondary and tertiary destinations. And so we can do both. We can fly from Phuket to Czech Republic. While they would have a lot of interlining and stuff, we can do it all within our own airline. And, have some interlining as well with Garuda, et cetera, as we're doing now. So it's a very exciting period of creating a narrow body and a wide body fleet. Basically the same aircraft, just a different tube. It's a longer tube, the 330. So we still got lots of efficiencies. And supplemented by cargo and AirAsia Move, it's a very exciting time for the airline. Let me be very clear, which I didn't say earlier. Number one for me is cost. I've got to drive cost down. I have two big impediments in front of me. Currencies in ASEAN have been weaker. That's going to change as the US dollar cuts its interest rates and our economies get stronger. But we still manage to be one of the lowest cost airlines in the world with high oil and a weak currency. So, we'll strip out cost wherever we can to get a value product, which is our best. So that's number one priority as an A321 passes by us, the future of AirAsia, is cost. Let's make no bones about it. That's my number one priority. And low cost means low fares. Low fares means huge demand. And I haven't mentioned it earlier, but also a big part of the airline is ancillary income. I want to grow that to 100 ringgit per passenger. People think I'm mad, but I said we're going to do 50 ringgit, and we did. Now with data science, with what Move is doing, etc., it's an exciting time for me on ancillary income. So, over the next 6 months, people will begin to understand what an exciting story AirAsia Aviation is, but the four other companies are as well.
Is there any plan B to the restructuring plan? Do you foresee any challenges that would come?
No, there are always challenges, but I think, look, I'm famous for saying these, that I've been through everything. Nothing's going to flinch me, and then COVID comes along. This 1 year we've gone through lots. I think we're there. You can't sing until the fat lady sings, right? So wait and see, but I think most of the challenges we've dealt with.
Going back to Capital A, so 90% of the revenue for Capital A comes from the airline. And with the future disposal, can the remaining...
Yeah, look, there are 4 standalone businesses. They can be listed, as I've said. I think we're fast approaching 25% of the revenue. And I've always said 50% would come. Now, that will never happen because the company is going to be split, but if you nominally put them together. No, these are great businesses. Move can be as big as Traveloka and Expedia. And Big Pay can be a very good earner for both. Capital Aviation Services can be as big as ST. Mm-hmm. And Santan can be as big as LSG. Or there's no real contract caterer in Asia. The upside is huge. Capital International is a steady income source. And Teleport, we started with 2 planes. They've got 3 planes now. So yes, absolutely. Absolutely. These are very strong businesses which can each, in my opinion, come to the size of aviation.
Are you able to share any key strategic partnership for growth as it is for the remaining of Capital A businesses?
Well, I've kind of said it. Teleport, the 3 businesses there. Move is going to be a very powerful OTA supplemented by FinTech. Aviation Services has really got a massive future ahead of it. It's learned all from AirAsia on how to be efficient and low cost, and has used a lot of what we've learned in doing data with other businesses and bringing it in. So that is a very exciting business, ADE and Santan. And Capital International is a very valuable brand. So, I'm not sure I'm supposed to say this, but if you look at it as a shareholder, and you're all going to be valuing it yourself, we'll give our profit forecast next week. and you'll begin to see, well, the airline could be worth, I'm just making up numbers, 8 billion ringgit potentially, right? Capital A Aviation Services, is worth almost 2.5 billion ringgit now, maybe 3 billion ringgit. The brand is worth $1 billion US, so that's 4 billion ringgit. So if we're adding it up, you've got 8 plus 3, 11 plus 4, 15. And you've got Teleport that presently may be worth about $1.5 billion, so 16.5 billion there. And then you have AirAsia Move, which is easily worth 1 billion ringgit. So, you're looking at 15, 16 billion ringgit of value there. And our share price now is, 4 billion ringgit. So, this is my own assumptions, and analysts and all will start. Now we have the opportunity to start selling the story. And you are the first to get my own personal views as a shareholder. This is not the CEO talking. So I think that's for us and you guys to start showing what it is. We're not going to do it all on this TV program, but today is an aperitif to where the value is, where we're going to grow, how we're going to grow. Of course, the managements will start talking about how they're going to develop these 5 companies, right? And then shareholders will decide whether this is worth looking at. There's been a lot of uncertainty in AirAsia, and that's, there's a huge cloud. Are they going to be delisted? What's PN17? Are you going to raise more capital? What's going to happen? Yesterday was the start. Not enough. That's why it hasn't been reflected in the price. No one really knows. We just said we're going to merge. There's no pricing. There's nothing. But over the next 4 or 5 weeks, we can start telling the story. Today is just a prologue.
So, as a shareholder of Capital A, what can I expect? What should I expect?
Well, you should expect a lot of value created from these 5 companies. I hope that we'll be paying dividends in the aviation side soon. I don't think the other 4 companies will be, because they're all in growth. But you should get, as a parent shareholder, you'll end up with 5 stocks, one of them paying dividends. And, from where you are right now, should be worth a hell of a lot more.
Okay. Last question. So, what will you be focusing on?
Everything.
Yeah.
Everything. I mean, I got a strong management team, but I still am needed. So I'll be, we have 2 blocks of offices. Capital A will be based in Damansara Heights, and AirAsia is here. I'll be still very heavily involved in all, but much more on the strategic side of the business, and less, with the appointment of Farouk and Chester, I don't need to be as hands-on. I mean, I'm as hands-on right now in sorting out Santan on the plane, or the cleanliness of the planes, or dealing with GE on creditors. So I hope in 2024, all of that will be sorted out, and I can really focus on driving this business top line and bottom line, the 5 businesses. And I'll have the time and the mental capacity to really use my brains in the best possible way to give support to the CEOs and the management teams to deliver this $15, $16 billion of value, if not more, over a period of 5 years.
Right. Thank you. Thank you so much, Tony, for sharing with us.
Pleasure. I think hopefully we do more of this, and I think obviously the idea after a long hiatus is to be back in the investment world, selling ourselves, which is effectively what we're doing, telling our story, and getting feedback from all of you on our story. So thank you very much, and Happy New Year.
There you have it. While aviation might have been Capital A's launchpad, they are giving us a powerful reminder. Agility, innovation, and a diverse portfolio are the keys to long-term success. Keep your eyes peeled on Capital A. See you on the next episode.